Good afternoon. My name is Scott Rutledge, Chief Strategic Officer. Welcome to today's recap and look ahead. So to recap last week, I know a lot of you were last time we saw each other. It was Thursday. I was doing that recap, and it looked as if the market was holding 2100. Right? Everyone was talking. We're holding 2100. Had a big down open, absorbed it. Don't miss out on the move through 2130. And I happened to have been long, probably 5-6 longs. So lo and behold, on Friday, boom! I walk in the office, not in the office, actually in the 4:45 I start tweeting, I see the futures are down 14. I'm like, I'm going to get a leg sweep here. I got to have a plan. If we get below 2105, which was kind of like the breakout level we got above, I got to reduce risk. If some of the momentum names I'm in start breaking upper areas like the 8-day moving average, I got to get out of the way because I don't want to sit in it for a potential move where you break below the 8-day and then all of a sudden you test a 50 and you hold your nose and go underwater. That's what you do as traders. And if you look here at the chart of the SPX, here you go. Well, this was a prior breakout. Okay, that was your 2116. Here was the November 16 high, and then this is where we were. Last week we broke above it, held above it. Thursday opened down and basically closed above it, and then this is what happened on Friday. Okay, was it a huge down move? Was it an end of the world type of situation? No, but to me it was like, okay, we just broke above the prior 2016 high and broke back below it and failed. So to me this ascending channel was important, so I reduced my risk. I had a bad day Friday, but I was like, you know what, it happens. And then this happened today. So, did I salvage a trade and lose less? Yeah. Does it still kind of suck? Yeah, but anyway, why do we trade active trends as momentum traders? Because, you can. This is when we broke above this descending channel, reclaimed the 8-day. So from 2060 all the way to almost as high as 2120, okay, that's 60 handles that we were above the 8-day moving average. So what happened here? Broke below it on Friday, reduced risk. What happened today? Broke below the post-horrendous jobs report low and closed on the lows. So you avoided today, and some people might have even got short and made some money. If that's you, congratulations. And now we'll see what happens tomorrow. We closed on with a low of 2078. The 50 days right there. Really no true signal to be long. Okay, into the close with the way Japan's trading and Europe's trading and the Fed's not till Wednesday. So for me, I'm flat again. I'm not short considering we just pulled in almost 42 handles. But I think tomorrow it'll be interesting to see can we at least find a trade where maybe we break below the 50-day, come back above it, get some kind of red dog reversal. And like if you sold when we broke back below 2107, you have the luxury to test it if we get below 2070 and reclaim it, and that's over 30 handles lower. And that's how you kind of manage trades. If you recall, we were talking, can tech that was lagging get flows, and can the rotation continue, or will it be a headwind? Well, it was a headwind. Look at the Qs. Qs broke below this inside range. Okay. First of all, the first signal was it didn't get above the 2016 high like I just showed you in the S&P. So yes, did this look like it was hanging in there? Was I long technology? Yes. But then on this breakdown here, on this gap that never got filled, I get out of the way. You had to as a momentum trader. Now we're below the 8-day, we're below the 21-day. I guess we'll see how we handle the 200-day tomorrow. But that's how you trade around things. Some guys might have gotten short. If you did, you made money. Okay. For me, I got out of all my momentum names on Friday and kind of stung. And today, because I was out, I was able to think a little bit clearly. And when I saw that LinkedIn deal for $26.2 billion, I'm like, you know what? Facebook's $330 billion in market cap. This is bought out for 26. Maybe some longs get a little worried, and we have a big gap, from earnings. So why not short, Facebook below 115.50 since it failed miserably last week on Friday and got me stopped out, which I tweeted about it. I'm always going to tell you when I'm getting out of stuff and when things change. I'm not going to hide under my desk. We're going to take that loss and move on, because losses happen. Broken patterns happen, but you don't need to stick around for them. So once I started talking about it on Benzinga, all of a sudden I heard Citron got short, and it wound up being a good trade. So anyway, if you look at Facebook, what could you have seen here? Well, I was long Facebook, okay, into this spot. It still looked good, right? It still looked like it was wedging. You go over here without looking at Friday's action. To me, I came in long on Thursday thinking, all right, maybe Facebook is ready to break out, and then it did not. Why was my stop right here? Because this was your recent low, okay? I actually got out some, I salvaged some at like 118, and then I got rid of the rest around, this 117.40-ish, and I got out of the way because what happened here? This little symmetrical triangle broke to the downside, and we lost the 8 and 21 day. That is a sell signal. So I came in flat, and then I was able to short it today and make some money. So now we'll see what happens tomorrow. It's kind of in no man's land. It broke into this gap. Didn't close on the dead lows, but it still has a big gap to fill to down here if it wants to. So this is a whole big open space. So we'll figure out tomorrow. Like tomorrow, if Facebook's flat, I'll say, you know what? Facebook's flat after trading to the earnings gap. See if it can hold 113.31 or get below and stay below it for more downside. Okay, and that would be the language. Twitter, shorts covered right away because they're like, wow, if that was taken over for 26 billion, maybe at from 40 all the way down to here, maybe I shouldn't be short this thing. And it was up a decent amount early on, so shorts covered, but there's still no buyers. So if you're going to be, taking Twitter that's acting horrendous technically, because you think maybe someone says, okay, that's 26 billion, this should be 15 billion, it's only at 10, it's going to be at 20 something, then maybe go out 6 months and buy options, or just trade it using your 3-minute, 5-minute charts or wait for something compelling. But just like LinkedIn, there was no clue that LinkedIn was getting, taken over here. All right. If you look at what happened, okay, actually, I think some traders might have been caught short. Look what happened here, just so you see, if the takeout happened after this move, okay, like just say here on this close, I bet you a lot of traders were probably long thinking we were going to take out the post-earnings high. So you could have, if the takeover happened then, traders would have been like, woohoo, look how lucky I am. Or if, when this traded above this into the, into the earnings gap, that's a overnight take-home long. But when it closes on the dead lows, just like high beta tech on Friday, I bet you, short-term traders said, okay, I can't be in this thing. If you were in it here and that's your stop, okay. If you were in it here, there were some people like Judy, congratulations on the website, who had it long. But technically, there was no signal here to be long it, into today. So anyway, if you were short it because of this move, I hope you didn't get too beat up today considering, woohoo, look where it is, all the way up in the trees. So anyway, let's move on. Early on when the market tried to rally, the Russell was still weak, the bios were still weak. They said, you go to the Russell, what can we look at here? I talked about it there. Actually, it's already at the 21 day. So here, you did get you a little bit of your corrective move. It broke its ascending channel here. So when it breaks an ascending channel, you get out of the way. Okay, and now we'll see what happens tomorrow. Maybe there's a red dog reversal around this price point. We'll see how we open up. Let's go to high beta tech. Tesla and Netflix, some of these guys tried to rally, but they're kind of broken and they wound up fading down. Tesla, this round trip stuff is freaking crazy, right? We had a great trade last week when it broke above this, hit our target going across, which made some sense, right? That's where it broke down from. And then who would have expected a full failure? That's not good. Netflix also, moved from 93 all the way up to, 104. You would think you could hold in here and continue. No one would expect a full move lower where you can't buy a dip. That's how difficult some of these things are. That's why you got to go a level versus a level. Some people probably got squeezed out of their short thinking that, it broke its ascending channel, it's a horrendous name, and then all of a sudden, boom, you had this nice lower level squeeze. So they had to get out, and now all of a sudden they're like, oh, I got squeezed out. The same way if you bought here, and you're still in it, you're like, damn, I tried to buy a pullback. I didn't buy 104s, I bought 96s, and that didn't work. So you got to be very careful. We're in a very weird environment right now where you have, the yen really strong, the Nikkei is getting crushed. You have Europe. I think the DAX is down 7% in like 3-4 sessions, like 15 to 17% off highs. And I know everyone's saying the U.S. is the safe haven, but we're usually a safe haven until we're not. The VIX just went from 15 to 20. We talked about buying the VIX below 15 just as some insurance because it's always cheaper before a hurricane hit. And now it looks like, the winds are swirling. But anyway, so we'll see what happens here. The Fed, there's like 2% chance that they raise on Wednesday, which they're probably not going to. There's a 23% chance that they raise in July, which they're probably not going to. If we were at all-time highs and broke above 2130, chances are maybe in July they would have, but if all of a sudden we're back down in this range land, they're probably going to think that they can't. So we'll see what happens on Wednesday. We'll see what happens with Brexit. But for tomorrow, I think traders are now being more tactical, taking it day by day. You see relative weakness, you try and get short, use the H sell setup. If we're kind of oversold and we open up into a key area, look for some kind of red dog reversal, take some off if it happens, and then trail the rest. And don't think something has to happen because of the pattern. You saw Tesla have a nice move and then give it all back. Netflix, nice move, give it all back. Amazon and what's it called? Amazon and Google. Google. That got me good. Still a little wishy-washy, and that's the way you have to take things moving forward. And that's it. I'll see you tomorrow morning. Have a good night.